we have a panel here of 3 panelists. First of all, to my left, Antoine Collin, Investment Director at Perceval, a private equity firm that specializes in turnaround. Then we have Bertrand Biet, partner at Janté, a law firm. And then to the far left there, Florent Hunsinger, receiver at Solve, a judicial administrator. So, first of all, and just to let you know that it'll be a panel of about 40 minutes and then a 10-minute Q&A section at the end for you if you have any questions. So first of all, I'd like to start with a question for Florent. Florent, you co-founded Solve in 2020 in the middle of the COVID pandemic. What was the thinking behind Solve, and what does it aim to provide that wasn't being fully provided for before?
Thank you. First of all, we founded Solve just before the crisis. It was in early January, so 3 months before the first French confinement. We were up and running at the time it began, and we were ready to help companies in financial difficulties. First of all, as I'm a receiver, but in France, we unlike our foreign counterparts, we are not involved in liquidation proceedings. We only help companies in going concern environment, and the goal is to help them any way we can. First, to help overcome liquidity crisis. So that was the first thing we saw in the confinement in early March. So we helped them get state-backed loans, PGE. So that was the main activity we had at the beginning of the sanitary crisis, and then help them to get subsidies. We had a lot of subsidies put in place in France to help companies with high fixed costs. So basically the aim was to renew the market of the receivership.
Okay, thank you. Antoine, you've been at Perceval for over 8 years now. Could you tell us a little bit about how the landscape of restructuring in a private equity context has changed since you joined?
Okay. So at Perceval's level, I think in terms of number of opportunities that we receive over the years, when we look at since inception in 2008, roughly we receive 100 to 150 situations. So that hasn't changed over time. And our approach too, meaning supporting these French SMEs by injecting equity for a long-term period and being involved with the management into transforming the business. So that hasn't changed. What I can say over the long run, and a few highlights about the past years, maybe in terms of sector, we see that some sectors have been impacted before COVID due to for example, the yellow vest movement, social movements, but also a change in business models with digitalization of their services. So that's retail, entertainment, tourism, of course, in a way also aeronautics. And these sectors were even more impacted by COVID. So they have been suffering for now several years. We see a lot of recurring opportunities and situation on that side. And there are companies that had this adverse market event, which is COVID, but are recovering their past level of activities. And then at the other side of the spectrum, I would say very resilient companies in health, B2B services that today really fuel the M&A activity, and with very high valuation multiples. So we'll see how that evolves in the future, but that's basically the landscape that we see in terms of sectors. So that's the first point I'd like to highlight. And the second is that maybe a comparison with what we knew during the 2008-10 crisis, where really we saw a really shrink in the credit system and very low liquidity available for companies facing this crisis. And I think from that point of view, the COVID crisis has been very different. The amount of liquidity provided to companies through PGE, as Florent said, but also the part played by shareholders and the private equity system by reinjecting money when they could, or finding arrangement with creditors to fix the balance sheet, has been, I think, not known in the past years. So on that side, I mean, the COVID crisis is quite peculiar. So I think the big question will be, all these companies, those who lost activity during the COVID, funded this by additional debt, so increase the leverage mechanically. And we also have, I would say, probably a bubble on really resilient sectors. So in the future, how will there be enough equity to support the financial structure of this, the ecosystem? I think that will be the big question.
Well, we'll talk a little bit more about this topic, especially post-COVID and shareholders' responsibilities and fund managers' responsibilities a bit later. But first, Bertrand, I'd like to get your legal perspective. What would you say the current regulatory framework is like for post-LBO restructuring? Have there been any changes in the framework recently? And is it much different in France compared to elsewhere?
Yes, thank you, Arjun. Yeah, surely those last 2 years, we have had in France a real inflation of the new legal rules. The first package was to adapt our insolvency or pre-insolvency rules, and the aim was to protect companies and business, and to create new rights for the debtors, and it was a success, in fact, because the idea was trying to avoid the insolvency of the majority of economic actors. The second package is also very important because it's is coming from the transposition of the European directive, and then to modernize our rules and to have some common basis of legal rules in Europe, okay, and it's really, for me, a revolution. Until now, and from 50 years perhaps, the French system was only focused on the debtors' side. And then we had, until October this year, the possibility to impose to all creditors some solutions. And the new rule today is for significant companies, significant, that said, when you have 250 employees and 20 million euros of turnover or 40 million of turnover, but not only on one company. You can have that level in a group, and when you reach that such level in a group, you will have to respect that new rule, and that new rule is that they balance the power between the debtors and the creditors. So today, from the 1st of October, if you want to negotiate your debts with your creditors, you have to respect that new rules. You have to negotiate with specific rights for the creditors, and the basic system is founded on the class of creditors, And that class of creditors are organized depending on the interest of the creditors and the securities the creditors have. It's totally different than the system before. So when you are an investor and you have trouble in the company in which you have invest, it will be much more difficult for me, much more difficult to find very quickly a solution, and you will need absolutely to prepare that negotiation using pre-insolvency proceedings, and then trying to find a solution between your interests, the interests of the creditors, the interests of the management, the interests of the shareholders, and so on. I assume that for people coming in that forum here about LBO, it's very important to understand that new rules, and then to have in mind that from today, if you have some difficulties due to the crisis, for instance, or not, you will have to work very hard and to imagine the good balance between all that interests.
And the new system, was it somewhat modeled on the US Chapter 11 rules?
Exactly. Perhaps to elaborate on that, we are in France Chapter 11-like system with the safeguard proceedings, but the new system, since two months about, something like that, the new system is now really based on that US Chapter 11. So you have the same rules and the same idea that if you're not in the money, you should leave. So basically, we think that it will help the sponsors to have a clear alternative. Either put money in or leave the company to its fate. So I think that's the main change. But there are a lot of let's say complex rules. I'm not sure we should get into that level of detail. But the main thing to bear in mind is that. Because you need to rank all the creditors in classes, you need to prepare your negotiation before entering into a proceeding, either out of court restructuring or whatever. You need to think before of the creditor structure in order to enter a negotiation with a clear landscape of the debt in mind.
Okay, thank you. This is quite a new regime to come in, and so we haven't really seen the full effects of it yet. But Antoine, do you have any comments on the law from your standpoint, or any predictions for how it will play out?
Yeah, so as you said, we haven't seen it implemented, so it's hard to forecast what will happen, but we at Perseva think it's a positive evolution. I think it will change the mindset of a shareholder, an investor, once he wants to enter this kind of procedure. As it was said before, it will need to be prepared. And the main thing is that I think it will avoid what we don't want is a deadlock situation where the company is kind of taken hostage by the fact that neither the creditor or the shareholder is willing to inject new money. And so the shareholder will have to bear in mind this responsibility he has in the procedure with the eventuality of the creditor, I would say, imposing its plan to be able to support the business. So I think it should be seen this way, as a more balanced regime and more responsibility given to the shareholder.
Okay, thank you. A general question for all the panelists here, or any of the panelists. Where does Siri fit into the post-LBO restructuring landscape? And for anyone in the audience that doesn't know Siri, it's France's Interministerial Committee for Corporate Restructuring.
So basically, the Siri is involved when you have a company with more than 400 employees at stake. So if the issue is purely financial, it will not need the Siri involvement. But if you need to restructure the target company, then Siri should definitely be involved, because you will have a lot of, let's say, involvement of the state or the public counterparts at a lot of levels. So I think that's the main thing to bear in mind. And second thing, if the restructuring is not only financial, you will then have to restructure the social and public debt, and Siri involvement is needed when you reach this level of let's say, number of employees.
Yeah, I think we have the Siri is part of a very of the French setup, which is quite unique and powerful to prevent difficulties. They allow to have a dedicated counterpart when it comes to negotiate with public creditors, and you can have a lot of different creditors. It's usually not only one, I would say, entity, and it's professional people that know this kind of situation. So I think it's quite unique in the French framework. And also, it should not be forgotten that they have a kind of equivalent in regions for smaller companies through CRP, DGE, etc. That also can help. So I think it's a very useful tool.
Okay.
Yeah. Perhaps I can add a little thing. It's, you know, in France, the state-granted debt is very important to support the companies during that crisis. And I think, and my experience is that Siri has a role to or to negotiate the old debt, or to help to have that guarantee, to have some new funds during the crisis. And clearly, it's typical French situation, and the role of the government inside the economy perhaps is not shared with the other European countries, but here it's very important, and it is very useful.
Okay, thank you. The name of this panel also includes the phrase complex environments, and so perhaps it would be interesting for each of you to talk a little bit about maybe an example of complex environments that you've been involved in from a restructuring perspective, and how you navigated them. So who wants to go first?
Perhaps one example, it's not so easy to speak about that because it's totally confidential. Today, you know, when I started that job in 1990, we only had the insolvency proceedings, and today we have a lot of new proceedings and pre-insolvency proceedings, and all the important cases we can treat them using that pre-insolvency proceedings. So today we are working for 80% at least of our for cases through a pre-insolvency proceeding. And the pre-insolvency proceeding is totally confidential. Okay. It's one of the quality, and it's why we are able to find some new solutions because of that confidentiality. But what we can say today is that we have sort of two families of cases, as Perceval, as Antoine told us at the beginning. You have some businesses who were in difficulties before the sanitary crisis. So the crisis is a new event, but not for, and you have to work and to try to find a solution more general and with all the elements of the activities. And we have also some activities which are in difficulties only because of the crisis. That means that the companies were well organized. They didn't have any difficulty before, so it's rather different than the first family. And in that sort of cases, it's very hard for me to find the right solution to preserve the balance between shareholder management interests, creditors' interests, and so on employees' interests also, because it's all together they make the activity, and perhaps the new rules will help us to find such solutions.
Antoine? Yeah, maybe an example that I will come to, but before that, I think companies that, and LBOs are part of them, that had historically a good credit history and a banking pool, diversified banking relations, were in a better position to ask for a PGE, and banks were keen on protecting their past exposition, so they were really willing to inject new money. It was not the case for example, we have a company in our portfolio that it was not the case, for example, for business that had no historical bank pool. We took over a bedding manufacturer who's called Adova in a bankruptcy proceeding in 2016, and it had no established bank relations, and so it was not in a position to issue a PGE, despite the fact it was really resilient to COVID, profitable and growing. And so we had to open a safeguard proceeding that went very well. The 2021 exceeded the level of activity of 2019, so it was well prepared. We had the support of clients and suppliers. And so it's a case where the setup of the government could not help the company, but the procedure and the framework in France allowed to concentrate the cash on relaunching the activity, and it was a very healthy, I think, very healthy move.
Thank you. Florent, do you have anything to add?
I mean, last year we put in place a lot of loans, state-backed loans, and this year the main issue is to reimburse them. So a lot of people are thinking about not repaying them. We had a few situations in which we succeeded in renegotiating this type of loans. So basically, a bank can agree to a partial reimbursement, but it's a complicated issue, and it should be discussed with all the stakeholders, and not only the bankers who issued that type of loan.
Thank you. So let's move on to talking about perhaps common mistakes that might be avoided. Are there any common mistakes in initial LBO structuring that tend to go on to necessitate restructuring? Or, in other words, as an LBO is being structured, are there any preventive measures that might be put in place to reduce the likelihood of restructuring later on? Antoine?
Okay. Well, I think that goes without saying, but of course the level of leverage is a key parameter to avoid in an adverse market condition to have too much debt and not being able to reimburse it. That's the first thing. The second is, I would say, a part of shareholder responsibility, and I think the fund, the private equity system played its role in the COVID, but it's the fact entering a new company that you have to take into account that possibly you will have to be prepared to reinject equity. So having this mindset, I think, is part of a very good, a very good way of structuring your LBO in the beginning. And I would say the third point is probably putting more attention to the cash monitoring. LBOs usually are profitable, cash flow positive companies, but it does not prevent the shareholder to and the management to have very pay close attention to its its cash forecast and the way its cash forecast and the way suppliers and clients pay or are paid. And finally, maybe always have as a shareholder at the back of your mind, and maybe even if it's difficult, probably a plan B of what could be, what cost could be cut in the eventuality of a flat activity, so you can be prepared to maintain profitability if the growth is not here.
Thank you. Do either Bertrand or Florent have anything to add?
Just an independent financial overview. That could be a good thing.
Thank you.
Yes. No, for me, the most important is clearly view from the restructuring side. The most important is the cash. So from the beginning of the investment and of the LBO operation, it's absolutely fundamental to have the view of the cash situation in the future, because it's only with the cash we can work if you have any difficulty in the business.
Mm-hmm. Okay. Before we move on to audience questions, I'd just like to get your collective take on post-COVID. What would you say is the shareholders' responsibility when it comes to supporting the business and giving more time to companies? And likewise, what's the responsibility of fund managers when it comes to, for example, longer holding periods?
Basically, from a legal perspective, they don't hold a lot of responsibility. But they are responsible if they are part of the board. So that's an important thing to bear in mind. On the top of that, if your question is regarding the perspective of the businesses, I mean, I couldn't say more than what was said before. Cash is king, so the reinvestment should be studied in order to see strategic acquisitions or to think about the upcoming changes in the market.
Thank you.
Yeah, but I think it's already been the case. I think, of course, shareholders must take into account, and financial shareholders, the fact that there might be a shift in the business plan of 1 to 2 years. So that means probably longer holding period, be a more capital patient investor. And that has been our approach as a turnover investor, meaning we have, in average, holding periods of 7 to 10 years. So I think that's a key element. And then, of course, is will the fund managers be able to support the business in the long term if the level of leverage is too high by injecting equity, or make the right arrangements with the creditors?
Thank you. Bertrand, do you have anything to add, or shall I open it to the floor?
Perhaps one idea. That's clear that, as Florent said, there is no any legal obligation for the shareholders and the investors to reinvest or to support. And they have also funds like Perceval. They have also some rules and limitation of reinvestment. So it's not so easy to support, in fact. So we have to build something, to imagine some new solutions, and to try to use the legal possibilities we have to protect their potential reinvestment.
Okay, thank you. I'd like to now open it up to the floor. Does anyone have any questions? Yes, we have a question here. I think a microphone is making its way to you.
Thank you very much. So my question is oriented on the receivables, especially because, well, private equity gives great access to cash, but how do you handle, as you said, cash is king, how do you handle the support of treasury when you have a deal in distress M&A?
Was that to anyone in particular, or the whole panel?
Well, the three of you.
Maybe I can give a few. I think when the first key thing to do is to have a cash forecast, but weekly cash forecast with in income and outcome of cash reviewed week after week. That's how you capture how clients pay, whether the invoice are well billed, what's your DPO, and etc. Thing that you can't see with a monthly cash flow. Usually the way normal companies do, but in distress you have to have that weekly step to review cash. That's the first thing. The second thing is factoring remains, I think, a useful resource for companies that are able to well manage their client receivables, because the risk of the factor is not on the profitability of the company, but on I would say the quality of the client. Distressed businesses are eligible to implement factoring lines. And then I think it's, of course, having, I would say, a very clear and good quality of information at the accounting level, both on to follow how clients and supplier are managed. It's a few hints about that.
Basically, as it is a confidential process, it will not involve clients. So it's it's the case in all businesses. Your question can be extended to all businesses. The main change in the cash, let's say, in the way you see cash in companies with financial difficulties is to cut all the non-operational expenses. So bank repayments, all the money out to social taxes and fiscal taxes. So these all non-operational cash outs should be stopped in order to help the cash in the short term and to give the process more time to achieve its goals. Let's say a new money or whatever.
Thank you. Anything
Thank you very much.
Okay. Any other questions from the audience? No? Doesn't seem like it. Okay, well, I guess that brings us to the end of this panel. So thank you all very much for attending.